Thank you, Mining Journal. Hello, everyone. That's interesting to follow. K92 spot. If you like high-grade underground mines, you're in the right place. We're probably a year and a half behind the progress of K92, who's done a great job. Their market cap, as he said, is about 150 million, and ours is 22, 25. Both assets were Barrick assets at one point and are now obviously independent. Forward-looking statements, which are available on our website. So, as mentioned, we're working on our main focus is the Invicta deposit, which is located about 120 kilometers north of Lima in Peru. We are fully permitted, fully funded, in development, and moving the mine towards production in the second half of 2018. We've built up our team. We are in development as it currently stands. We have a PEA with an initial, and I say initial, we'll talk about that, a 6-year mine plan, and our targeted production rate is 350 tons a day. A little bit about the company. That share price is a little bit outdated as it's been a tough market in the last week, but we have, that's not good, there we go. Sorry. We have about 2 million in cash today. That's as of our last financial statement. We are building the mine and developing and putting the infrastructure in place. The capex to build this project is only about $4 million. All dollars, by the way, are US dollars, and we think in terms of gold ounce equivalent. The deposit is a gold copper polymetallic deposit, and its the revenue contribution is about 72% from precious metals, gold and silver, mostly gold, and the rest comes from, in order, copper, zinc, and lead. We will make 3 concentrates: a copper concentrate, a zinc concentrate, and a lead concentrate. We have about 120 million shares outstanding, of which management and insiders own approximately 22%. The management team is comprised of myself, and in no particular order, there's Ryan Webster has just been added, and he was with Dominion Diamond, which was sold in 2017. And Dan Kavari is a very experienced operator. He runs our operations. Dan was with both Yamana, where he was director of operations, ran many of their mines and development projects in Brazil and South America. Before that, he was with Agnico Eagle and was in charge of the development of the Meadowbank mine in the north. Our PEA, which was recently issued, was based on a requirement that the board had put together back in the financial downturn, and they asked SRK to provide us with a mine plan that uses the existing infrastructure that was put in place before we owned this asset, and got the company to cash flow, as soon as possible. It has no IRR because it goes to positive cash flow right away in year 1. We'll be making production of 34,000 ounces a year over a 6-year period, and it will be on average, 8.5 grams. 8.5 grams, and that includes metallurgical recoveries. As we think in gold ounce equivalents, those calculations include the estimated metallurgical recoveries, and there is definitely an opportunity to do better than these metallurgical assumptions. Our all-in cash costs will be in the $575, below $600, and we produce about $10 million a year in pre-tax cash flow. In addition to this, we have put in place a $7 million prepaid gold forward sale with a hedge fund from New York called Pandion, who've been very helpful and supportive in that transaction. That allowed us to have the capital to put the mine into production. It's amortizing over 45 months, and we have 22,500 approximately ounces to pay back in that period. And when we pay an ounce back, it costs us $500 an ounce. That starts amortizing in December of this year. Our business plan is focused on basically we're just overseeing a bunch of different contractors. We have contract miners, which is very common in Peru. Contract trucking to take the ore right from the mine down the mountain and over to a processing facility that's owned by a third-party toll milling. As we grow in time, we're looking to bring in some of those aspects into our own business, and it would probably start with the processing side. We're actively looking to acquire a plant in our proximity, or build one on site, which could take 2 to 3 years with permitting and engineering. When we do that, we would increase our production. Obviously, we wouldn't build a mill or buy a mill that is for 350 tons a day. The project before we owned it was fully permitted and had a bankable feasibility to run 4,200 tons through a plant per day. And again, we're only focused on 350 tons a day, so very small subset of the overall mineralized opportunity. And you can see here on slide 7, the yellow dotted lined area is the area of our operational focus and our initial 6-year mine plan. The average width of the vein that we are mining is 8 meters wide in the mine plan, but it extends up to 22 meters at its widest point. It's nearly subvertical in nature, so it's very easy mining. We come in through this level, the 3,400 meter level, which exists, and we have developed the first sub-level, which is 30 meters higher, 3,430. We've sampled each of those levels every 5 meters, and on the first level, it was 9.86 grams over 130 meter strike length, average width 6 meters. And on the second level, very similar grades, 9.22 grams, which, as I mentioned earlier, that includes the metallurgical recovery. So the actual grade on these levels is probably closer to 10 grams per ton. Here's our production profile on average. It's 34,000 ounces equivalent of production. And the payable metal, because it's polymetallic and using a concentrate, is about 27,000 ounces a year at 350 tons a day. If we can get this up to, say, 600 tons a day, that's approximately 50,000 ounces a year. 1,000 tons a day, which is what the EIA allows for production from this operation, is almost 100,000 ounces a year. So you can see it's quite scalable. There's lots of room for exploration upside, as demonstrated on this slide. Each of these red blocks is 3 gram equivalent. And we need to get in here and start drilling and populating some of these areas. Okay, so far what we've completed, we've got the mining contractor and they're working on the development. They've completed the first sub-level, they've completed the ventilation raise, and they've completed the mining slot. And so the mine is about 3 weeks away from being ready to operate at 350 tons a day. The next step for us is to secure a toll milling facility and start shipping some of these bulk samples from our development material, which we've commenced this process, and we've run our first 1,500 tons through, and that will continue throughout the course of June and into July. And we hope to get to about 4,000 tons of that completed in June, July. And that'll get us our first cash flow imminently, next month. We hope to get to our 350 tons per day in the summertime, really. But certainly we say second half, but I believe it'll be in the third quarter. And going forward, securing a longer term processing solution is really key for us. And when we do that, either through a contract at one of these toll milling facilities, we're testing a few of them right now with our development ore to see how their process is, how their recoveries are. Then we can sign and enter a long-term agreement. And also, after that, we'll enter an offtake agreement with someone like Glencore or Trafigura, one of the off-takers. And then, while we're, I'll talk about the upside within the mine plan, but we need to look at increasing our production as the next step through drilling and activities. Okay, so in between these two large populated blocks, 4 grams on this slide, is no blocks in here, and it's principally a result of lack of drilling. Our infrastructure is all the way through, and we've sampled this, but we're in the process of, in the next 2 months, creating an exploration drift right here, 2 by 2.5 into the hanging wall, and we'll drill into this area and then also into this area in between these 2 blocks. And we're pretty confident that it continues, the mineralization continues throughout in here. It's prohibitively expensive to drill through and into the mountain down here. And while this infrastructure exists, it gets us a lot closer, and it's more accurate. The mine plan is 130 meters high, and 150 meters above the 130 meters, we have the same sort of grades and widths, 9 meters of 8.5 grams. The mine plan, I remind you, is 8.5 grams by 8 meters. So we're pretty confident that we'll be in here for much more than 6 years mining. This is a picture of what's existing in terms of infrastructure. We come in through the portal, and they've cross-cut into the mineralization and then created a series of cross-cuts. And we've sampled, starting at this wall and ending at this wall, every 5 meters without discrimination, and it's 9.86 grams. There's a camp on surface that holds, this is just about for the people that can't see these slides. This slide is talking about the infrastructure that's in place, and as part of that, I should talk about there is a full camp that can house approximately 70 people on surface, and we're in the process of doubling that. This is a slide on the financing with Pandion. They've been extremely supportive, and they're there for us if we want to buy a mill, build a mill. They provide additional capital for us. The company has run 2 bulk samples previously to get a handle on the metallurgy. In total, approximately 1,000 tons was completed in 2 different samples, sent to 2 different mills. And as you can see, the recoveries were quite high, over 90% for copper. And the salient point is there's no deleterious or penalty elements in the concentrate. So a very nice, clean concentrate. Some of those samples. Okay. Upside, this is the main vein that we'll be mining, the Atina vein. And in addition, there are other structures and other zones on the property. The Pukamaya vein, up here, northwest. There's 2 drill holes out here, and combined 50 meters apart. There's a whole another year of actual mining operating tonnage already identified at the same grades and widths that's in the existing mine plan out there. So Lupaka's got to get out there and do some drilling later this year. And the same situation resides in the Danny vein. Another year's worth of tonnage sitting out there. Now, stepping back a little regionally, this is our area of operational focus. And you can see there's quite a bit of upside to work below the existing workings and above. This is Pukamaya over here. Oops. And that's our resource statement. I'm out of time, and it's lunchtime, and everybody's running late here. So thank you very much. Thank you to Mining Journal.
Thank you, Will. Thank you very much.